Last week, we talked about infinite banking and how to leverage it to become your own bank. Today, I'm going to show you how to do it. My name is Amanda Ryba. I have been working as a licensed financial coach and consultant for the past 8 years, and it is my goal to eliminate to the world what wealthy people do with their money. And one thing all wealthy people are catching on to is how to cross out the banker and go directly to their own accounts if and when they need a loan. And here's how it works. Infinite banking is a concept. It's not a product. Leveraging a permanent life insurance policy. I personally prefer IUL policies because based on past performance history, they tend to grow your cash value the fastest. Step 1 is to get with a licensed life and health agent in your resident state or country that is non-captive and trained on how to set these policies up correctly. What you want to do is set your policy up with a minimum non-MEC death benefit, meaning you're getting the least amount of life insurance required for the most amount of premium that you want to contribute per year. Let's take a look at an example. This is an example of a healthy 45-year-old male that doesn't smoke, whose goal is to save $100,000 a year every year over 5 years. Solving for a minimum non-MEC death benefit means that he would need to get a minimum of $1.555 million in life insurance to do this. Now, if you are a life insurance agent and you're watching this for training purposes, do not sell a client a $1.55056 million death benefit. That just looks really terrible. Round this up. I would probably round this up to 1.6 million just to clean it up a little bit, make it look a little nicer. But either way, that is the minimum amount of life insurance required for the max premium of $100,000 a year to go in over 5 years. So if the client were to do that and put in a max premium of $100,000 every year over 5 years, assuming an average 6.28% rate of return, after the first year, he would have put in $100,000. It is expected that his net surrender value would be at $55,000. His accumulated value would be at $91,000. The accumulated value is how much cash you actually have growing behind the life insurance policy. The surrender value is how much a life insurance company will give you access to. Now, I will say most companies do not allow you to access your surrender value for at least a year. The insurance company I'm looking at here allows you access to your surrender value after that money has been inside your insurance account for 30 days. So those are just some features you want to look at when you're designing your policy. But let's say he does this for 3 years, and maybe in that third year, he needs to take out $100,000 to go and purchase some rental property because he owns a real estate company, or he needs to go purchase something big for his business to expand his company. Well, after the completion of the third year, he would have $258,000 in net surrender value. So that means he'd be able to take out a loan for that amount of money, go and finance the projects that he's looking to do. The money would still grow and earn interest inside his accumulated value as though it never left the account. And then when he is ready to, he is able to pay back off that loan in his own time. Now, depending on the type of loan that you do, some insurance companies charge interest to do this, some don't. If you're doing the loan type that allows your money to still grow and earn interest like it never left the account, interest will 100% be charged. Average is probably 4.5% to 5% that I see today. But if you're earning, we're just showing 6.28% here. If you're earning 7, 10, 15%, like I've seen some of these accounts do, you're netting a lot of positive interest on money that doesn't technically exist. This is what is the definition of infinite banking, which is leveraging money in 2 places at one time. Now, step 2 in becoming your own bank is to actually submit an application and see if you get approved. Step 3 involves you actually getting approved. So once you do get approved and you accept that policy, max fund that account immediately so that you have access to the maximum amount of money within those first 30 days of making that deposit. Now, it is important to note that permanent life insurance policies, including IULs, are designed to be kept for life. They are long-term products. You're supposed to keep them for as long as you live. However, if set up, structured, and designed correctly from the very beginning, you do have access to use that cash value in the first year. So hopefully you learned a lot in this video. I know the whole concept of infinite banking is something everybody is talking about right now. And as you can see, it actually works if done correctly. So if you like more videos like this, click that subscribe button and click the bell to turn on notifications because I release a new video every single week. If you would like to work directly with somebody on my team or myself, you can click the link in my bio to get connected over to my calendar to schedule a call with us. And I love it when you stay till the end. So if you can, drop a comment below on what you liked and what you learned. Share this with a friend that is looking into this concept. And I look forward to seeing you back here on this channel again next week. Have a good one.